patterns and movement of an individual share price differ from each other. They are unique and usually portray their own movement and character, but in general, they go through the same cycle and the same process of uptrend, downtrend, and sideways. Patterns and behavior of people trading in the market has never been changed since. This has been result in repeated and predicted patterns of movement has been occur again and again. Before we review on various patterns of the stock market, you should know the basic of market movement. Stock market move in a zigzag pattern. There is no share price or any financial equities move in either straight up or down. After some moment, a stock price may break out to achieve higher high compared to previous price. After it has gone through some aggressive buying, there will be seller to create a pullback or retracement of a stock price. This result in the share price going down temporarily. Then if there is a lot of interest from buyer again, it will resume its movement upward and set for another rally. We go through a chart to see an example of natural movement of a financial equity. In this chart, we can see it is a chart of gold futures 15 minutes time frame. We start from the left where initially the price goes up. It starts moving upward because there is interest from buyer over the financial equity. Then it goes down for selling pressure or the profit taking point. After some moment, the seller becomes less aggressive and the buyer comes back into the market. It goes up, down, until at the end the buyer becomes less aggressive and there is possibility of market reversal. The same goes to this Bitcoin USD chart. As you can see, the price goes up and then down again, and next it goes up again and then down again, and then it continues to go up. As you can see in this chart, the Bitcoin USD is in a rally mode and is in an uptrend. Now for another example, you can see the Apple Incorporation chart, which is this is a daily chart. Initially, the same process goes on. It goes up and then it goes down, then it goes up again, and then the selling pressure takes place. It goes down again temporarily and it goes up again. From all chart, we can conclude that every financial equity move in a zigzag pattern. There is no financial equity up or down in a straight line. Thus, this knowledge is important so that you initially understand the market movement. This will help you on doing the advanced analysis in the later course. It's also very important so that you did not panic in any temporary selling pressure or temporary buying. It will stabilize your decision on not rushingly sell your equities if it goes up or down in time. In a major scale movement, basically there are two types of market movement. Number one is the main movement. Every share price move in a zigzag pattern. This comes to the basic knowledge that in every market condition, there is buyer and seller changing hands. But in every new trend movement, the aggressiveness of buyer and seller changes. Next, in every man movement, there is counter move or the retracement. This counter move or retracement move against the man movement. Any financial equities move in major either upward or downward. First, we see the definition of an uptrend movement. An uptrend movement happened when the market making higher high and higher low than previous. When the major movement is in an uptrend, we can see that the movement making higher low and higher high than previous. In this movement, we can conclude that the main movement is upward, which is the bull market take place. If the movement making lower high and lower low, then we can conclude that the market movement is downward. Thus, the main movement is downward and the counter move is upward as in the figure.